Good morning, friends. After a pause of 4 or 5 days, I think, we are again. I am again in Instagram with you and also Facebook page. It is accounting class 34, number 34. Okay, and the topic is single entry. And I'm telling you, friends, eventually it is the last class for the time being on accounting. I have already taken up a good number of topics. Accounting concept as a process, now transactions, then process of recording, the journalizing, journal, then ledger, final recording, ledger, posting, costing, balancing, and then summarizing, preparation of trial balance. This part a group. Then another group is cash book, single column, double column, triple column. Then final accounts, that is to final account of trading concern. That is trading account, profit and loss account, and balance sheet. And again trading final accounts of non-trading concern, that is income and expenditure account and receipts and payments account. And right now we are in the last topic, that is single entry, the final accounts of the incomplete records. That is those who do not maintain the double entry system of bookkeeping. They try to find out, they also find out the results of the transaction taking place during the year concerned, and that is done with this process. And for this purpose, we have to prepare opening and balance sheet. We have to find out the opening balance sheet or opening statement of affairs to get the figure of the opening capital, and then the figure of closing capital comes out with the help of the closing statement of affairs, and the difference between opening capital and closing capital minus opening capital, it reveals the gross, it reveals the profit. There is subsequent adjustments. After making subsequent adjustment, we get the final results of the transactions for the organization concerned, for the period concerned. Now we have taken up another example. This is the final example. And this is the information here. Total machinery opening and closing 40 and 50. You go through the picture, please. 30 debtors 30, 40, furniture 15, 20, as of 1/1/20 to 31/12/20. Okay. Cash at bank 18, 30, stocking trade 20, 30, sunny creditors 20, 32, cash in hand 5 and 8, bills payable 6 and 8, bills receivable 9 and 12. Okay. Now there are other information given. Number 1, during the year, Mr. X withdrew 10,000 for his personal use. Okay, and introduced rupees 5,000 into the business. There is a further capital. Next, number 2, alternate information. Depreciation, plant and machinery 10% per annum, furniture 12% per annum. Now there is another additional information. Addition to plant had been made during the middle of the year and furniture at the end of the year. Mr. Raj, one of the debtors of rupees 2,000 is absconded, and his account is to be written off. His account is to be written off. Written off as bad debt, and provision for bad debt is to be created in the prepares statement of affair and the balance sheet. Now come to the solution. First of all, as you know that under single entry system, the profits come out not through the lengthy process of journal, ledger and trial balance. Just the difference between the opening capital and the closing capital gives us the figure of our profit. And for this purpose, we have to find out the figure of opening capital and the closing capital. And what we have done, we can do it as a separate statement of affairs, for the opening date at 1/1/20. Separate statement of affairs at 31/12/20, that is at the closing date, and thereby we will get the difference of the capital. But there is alternative. So instead of making two separate statements, I am making a combined statement. That is, that is allowed. I have already told you. So I have to prepare one statement of affairs for the opening period. Then I have to prepare another statement of affairs for the closing period. And we get the capital fund on opening date, capital fund on the closing date. Okay? And then we make the statement of profit. But here I have made a combined statement of profit and loss account. Combined statement. What does it mean? Combined statement is for the period ended. For the year ended 31st 12/20. Okay. Now here you see that I have made a combined statement to find out the opening capital and closing capital. You see, opening plant 40,000, closing 50,000. Okay, as far as the figures given. Furniture 50, 20, stock 20, 30, study debtors 30, 40, bill server 9,000, 12,000, 18,000, 30,000 bank balance, and cash opening 5,000, closing 8,000. So the total of opening asset is 1,39,000, and the total of the closing asset is 1,20,000. Okay. Now we have two liabilities here specifically given. That is Sunday creditors 20,000 opening, 32 closing, bill payable 6,000 opening, 8,000 closing. So the total of assets 1,39,000 as on 1/1/20, and we are getting this figure of total capital of total outside liability 26,000. The difference is 1,50,000. That is the opening capital. Okay, friends. So this is the opening capital, and similarly we have found out the closing capital. These are the statements. These are the figures of the closing assets, and totaling 1,90,000. And here this is the liabilities 40,000, and this is closing here. So we are getting closing capital 1,50,000, opening capital 1,30,000. So the basic figures are ready. Now come to the come in the pro forma of finding out profit and loss account, which you have done earlier. Now this is closing capital. We are writing closing capital 1,50,000 and opening capital 1,30,000. Clear? So this is the two figure which we have already gone. We have got by the preparation of this type of combined statement. Now closing capital, it is opening capital. Now I have already told you repeatedly, the closing capital at drawing less base capital is equals to the less base capital less opening capital is equals to the gross profit. And instead of making no statement, I am making this type of statement. So it is closing capital at drawing. It is how much? 1,60,000. Here. Now opening. Now I am writing this part. That is debit part. It is 1,30,000 opening capital less capital 5,000. So it is 1,18,000. And it is the total of 1,60,000. Now 1,60,000 and 1,18,000. Difference is our gross profit. Clear? So we have got the gross profit. As I have told you, if you make the statement from the opening closing capital at drawing total less opening capital less base capital will be equals to gross profit. And instead of making that type of statement, I am making this accountant statement. Okay. And now we have got the gross profit. So now this gross profit has been brought down over here. Here, and from that we have to adjust. We have to make the treatment of the adjustments given. Adjustment means what is to be done at the closing part, because which have not been passed through, which have not been recorded, now what to be recorded. Now what we have done? What are the information given? This is during the year Mr. X has withdrawn rupees 10,000. Yes, withdrawn rupees 10,000. We have written over here and introduced rupees 5,000. Here. Now we have got the gross profit. Now see over here. Depreciate plant and machinery at the rate of 10% and furniture at the rate of 12%. Here, 10% per annum. this should be clearly discussed, and I have cleared it many times. Depreciation per annum means you must consider the time period. So per annum means per year. Okay. So depreciation should be at the rate of 10% per year. Now we have got opening figure of 40,000, closing figure is 50,000. Obviously, the confusion may arise on which amount should we charge over here or should we charge at that amount. These things I have already cleared. This is the opening balance. So and our closing contribution is 50,000. Okay, closing. But this does not mean. But if you charge depreciation on this rupees 50,000 at the rate of 10% per annum, it will be a misleading treatment. It will be a misleading statement, even wrong statement. Why? Because this 50,000 has not, the 40,000, this 50,000 has got two elements. One is 40,000 which stood at the opening date. So this 40,000 has been utilized for the whole year. Clear? This 40,000 has been used in for the whole year. So you have to charge depreciation at the rate of 10% on this 4,000. Okay? So your depreciation should be at the rate of 10% on 4,000. 40,000. How much it is? It is 4,000. Clear? I think it is, I have cleared it. Now what's about the addition of 10%? If 10% per annum had not been written, then we should charge depreciation exactly at the rate of 10% on the closing figure. It would have been 5,000. I have already told you repeatedly in my previous occasions. If the time mentioned is not given, per annum is not given, then depreciation should be charged on the closing figure. But since it is written 10% per annum, we should give the respect to the time of use of the asset, the time of use. 50,000 means 40,000 opening and addition 10,000. So 40,000 on 40,000 you should charge depreciation for the full year. Clear? And now, what do you think with regards to another 10%, that is addition? There are some assumptions. There may be some assumptions. If you think that the asset was purchased at the opening date of the year, that is addition was made at the opening date, then you would have to charge at the rate of 10% per annum on 10,000 for the full year. Clear? If you think that the asset was added at the closing date of the year, so on that part, that is on that addition of 10,000, there should have been no depreciation, because what is depreciation? Depreciation is the loss in the value of asset due to use and warranty or the passage of time. Since you have introduced this the asset of rupees 10,000 at the closing date, there is no question of use and no question of depreciation. Clear? But if you think that it has been added at the opening date, so you have to charge 10% in full for the whole year. Clear? Now here, then what do you think? I have already told you for your practical performance. I have told you if nothing is specifically given on the addition, you should think that the addition has been made in the middle of the year. Okay? There are two thoughts. One thought, it is charged at the 10%, 40% for the whole year, 10% for the half year, or 10% for the zero period. Okay? There are two alternatives. I think, sir, that day I told you, Mr. P is thinking that it was introduced at the opening date. So if it is introduced at the opening date, the depreciation at the rate of 10% per annum will be 1,000. Clear? Now if you think, no sir, yeah, I think it was introduced at the closing date. So people think that there will be zero depreciation. So you have taken 2,000. So you should take average of rupees 500. Okay. So it is known as average period. Clear? But here in our problem it has been clearly stated. Addition of plant had been made during the middle of the year. Clear? Addition of plant has been made during the middle of the year. So 5,000 for the 40,000 for the whole year and 10,000 for the half year. So it is 500. Okay. Now you should calculate it and you will get for the whole year the depreciation is 4,000 on this figure. On this figure depreciation 4,000. On this addition of how much? 10,000. Now on this 10,000 addition the depreciation is 10% half year. Okay. Here. So it is 500. So the depreciation on plant is how much? It is 4,500. So it has been written. Okay. Whatever you have done, you must show it in your working note. Working note about one depreciation on plant and machinery on rupees 40,000 for the whole year. On rupees 40,000 for the whole year. Okay. Now just to calculate it as I have already told you, 40,000 into 10%. Okay. Or 12 by 12. Okay. Sorry. Clear? And 10,000, 10% or okay, clear? So in that way you will get 4,500. That figure I have calculated, just I have found out and I have written. Depreciation on plant and machinery, how much? 4,500. Clear? Then furniture. To see what is that in the furniture, regarding furniture. Regarding furniture, what we are getting, furniture has been depreciated at the rate of 12%. Okay, 12% per annum. Clear? Again, you follow the same principle. What is the principle? 15,000 for the whole year. For the whole year, 15,000 at the rate of 12%. It is 1,800. Okay. Just you find out. You can calculate it. 1,500 into 12 by 100. Bus. Okay, you will get this figure. And there is another addition of 5,000. What you do? You may charge for the whole year. You may charge for the 0 period. Okay, and you should make the average. But here is clearly stated the furniture has been added at the end of the year. So you have no problem at all. So the furniture amounting to rupees 5,000 has been introduced at the closing date of the year. So should there be any depreciation? Should there be any depreciation? What do you say? Should there be any depreciation? No depreciation. So zero depreciation. So this figure we should charge depreciation on 15,000 only. On the addition of 5,000, there should be no depreciation because it has not been used at all. It has been brought at the closing date of the year. Clear? So now it is at 1800 is the depreciation on furniture. Clear? So that was clear, I think. That's the next one. Mr. Raj, one of the debtors of 4,000 is absconded. Absconded is वो गए भाग गए माल खरीद किए सुमित सानी का माल भाग गए नानीगंज चले गए नानीगंज कहाँ हम लोग नहीं जानते हैं तो माल भी नहीं मिल रहा है चलो 1 महीना 2 महीना 1 साल हो गया रुपया नहीं आया चलो इसको क्या करें डेट कर दे है ना बिकॉज दिस अमाउंट कैन नेवर बी you can never get that amount, okay? And that part of the data which cannot be realized is known as bad debt. Bad means gun coup माने घटिया. Bad, it has gone bad माने ये नहीं मिलेगा. Undated is your asset and 2,000 Mr. Shahani or Mr. X whatever be there or Mr. Raj whatever name is there. So this man is not in a position to give the amount, okay? So it is your loss. That loss will be written off. Okay. And in order to write up, so it is bad debt. Okay. Bad debt 2,000 as it will come. Here. And what is the general in case of double entry system I have told you what is this journal? Bad debt account debit to sundry debtors. Okay, how much? 2,000. Here. So sundry debtor has been reduced. Okay, the sundry debtor has been reduced. In the balance sheet, what I have done? Sundry debtors 4,000, 40,000, and bad debt has been deducted. So the net balance of sundry debtors is how much? 38,000. Net balance of bad debt is sundry debtor is what? 38,000. And the reserve for bad debt. Reserve for bad debt I have already told you. The provision for bad debt is to be created at the rate of 10%. Provision for regarding provision for bad debt, you know better. I have already told you. At the end of the year, you have the return of rupees 38,000. Okay. Out of this 38,000, total amount may be realized or may not be realized. A part of the debtors may be realized or may not be realized. For that, we make a reserve. Okay. We deduct some part of the profit. And in order to make future loss resulting out of non-payment of the dues by the debtors. Okay, so that is known as provision for bad debt. That concept has already been dealt with in the previous occasions, repeated many times, and that is known as provision for bad debt. So what is the provision for bad debt? Provision for bad debt is 10%. 10% of 30,000, how much? 38,000, 10% of 38,000 is 3,800. So from the total bad sundry debtors, we have deducted that amount, and that loss in that reserve has been okay. So we have got the gross profit out of this 42,000. From this 42,000, we have deducted depreciation on plant and machinery, on furniture, bad debt, provision for bad debt, and the net profit we have got 29,900. Clear? So that is the figure. So we have got the net profit. Clear? Now we have to prepare. So one part is gone. We have to prepare statement of profit and loss account, and that has been clear. Okay. Now next part. Next part is final statement of affairs. That is balance sheet, which we call. Okay. Now, as we know, we have already told it. The balance sheet is a statement of all the assets and the liabilities. Now I am making a phrase. So it is a detail. It is a detailed statement. Okay. Detailed statement. Detailed statement of assets and liabilities. Now you see, opening plant and machinery. Opening balance how much? 40,000. Okay. Addition how much? 10,000. So it is 50,000 total. Now depreciation, as I have already told you, you should show that amount in the working note, and you have got that amount of 4,500. It has been shown over here in the profit and loss statement. Okay, 4,500, and it has been deducted over here. So it is 45,500. Clear? So then furniture, fixture, furniture 50,000 opening balance, add addition. Okay, 20,000, and the depreciation at the rate of how much? 12%. And we have not given the effect, any effect on the addition to plant and furniture, as because it has already been stated that the furniture was added at the closing date of the year. So it is 1,800, and this 1,800 has been shown over here as a loss, and here it has been deducted. Then stock, closing stock of 30,000, sundry debtors 40,000. Out of the 22,000 is bad. Mr. Sahani, who will never give, Mr. Raj, who will never give you the amount, so that has been deducted. So it is a loss, and that has been deducted from the sundry debtors, and that loss has been shown over here. And on the remaining balance of the sundry debtors, we have made a provision at the rate of 10%, which is 3,800, and that amount has been shown over here, and it has been deducted over here. So neat sundry debtor is 34,200. Okay. But there is another alternative, friends. Right now I am making it because your sundry debtors, you may show sundry debtors as 30,000, and the provision for bad debt may be shown in the liability side of the balance sheet. Okay, that is the best treatment to my as per my thought. Okay, because the provision for bad debt does not reduce the balance of your debtor. Okay, because you are the debtor of 40,000. Mr. X absconded. He is not ready to pay any amount. He is not in a position to pay any amount. So this is absolute loss. So remaining balance of 13,000. We have to make a provision, and that provision is not a genuine loss, as because you may get that amount, you may not get that amount. So it should be kept as a reserve over here. Anyway, whatever you do, you can do it. Now, then comes your reserve for bad debt. Sorry, bill reserve. It is 12,000. Okay, bank balance it is how much? 30,000, and cash rupees 8,000. Clear? So our asset side of the balance is showing 1,77,900. Now, so far as this part is concerned, okay, you see the capital. Capital, how do you show? You may detailed treatment. Okay, capital opening balance is 1,30,000. How? Where from I will have got it? I have got it from here. From the opening statement of assets and liability, we are getting opening capital. Then face capital 5,000. Where you have got the information given. The Mr. X has introduced rupees 5,000 this year. Okay, so face capital. So face capital has enhanced that profit, capital. Your capital has been increased with the help of this amount. This is the total net profit. So net profit has been added. It is 1,47,900, and then drawing should be deducted, and it is 47,900. This is 1,37,900. Sundry debtors, closing sundry debtors. You see over there it is 32,000, and this level is 8,000. Okay, so you are having the liability side total 1,77,900, and as per thoughts, as per rule, as per business status, as per the equation of accounting, that is the total assets must be summation of assets must be summation of liability. Okay, and that has been done. So our balance sheet equity clear, and so we have equality of assets and liabilities clear. So this is our statement of profit and loss, and it is the statement of affairs, final statement of affairs or balance sheet. It is better not to say balance sheet, it should be regarded as final statement of affairs. Affairs means assets and liabilities. Okay, assets which are where asset book I have already told you, asset right to service. Right to service, you have the right to get service from those. When you have the right to get the service from your contract machinery, from your furniture, from your stock, because furniture will be, plant and machinery will be utilized, furniture will be utilized, stock is to be used for selling, senators will pay their amount, and a bill receivable, you will realize the amount, a bank will give you the amount because your amount has been kept over there and cash apna box mein hai. Okay? Now this is the right to service, and these are the claims to service. And creditors, your they will come to you, mera paisa dijiye. Okay, so it is their claim to service. They will be claiming their service. This level also going to claim the service, and it is capital that will be claimed by the proprietor himself. Okay, so this is the total assets and liabilities, and that is the concluding part of our topic. Single entry. Okay, final accounts from incomplete record. Clear, friends? So go through the what we have done. The very important topic we have completed during our 34 classes. Okay, we have given detailed analysis of the concept of accounting. Clear? We have given the concepts of journal, pro forma of journal, ledger, pro forma of ledger, and balance sheet. Trial balance. So this is one part, that is the recording aspects. Then come constructive aspect of accounting, that is preparation of final account. That final account, three type of final account. Those who maintain double entry system, those who do not maintain double entry system. Those who maintain double entry system, we have prepared trading account, profit and loss account, and balance sheet. And those who do not maintain double entry system, that is single entry, we have prepared statement of affairs, and we have prepared the balance profit and loss statement and balance sheet or statement of affairs. Okay, and there is another group, those who maintain double entry system, but they are not engaged in earning profit. Okay, so they are basically other social organizations and non-trading organization, non-profit organization, they prepare 2 accounts. They basically prepare, maintain books, journal, ledger, travels, okay? Clear? And the cash book. Now the summarized cash book at the end of the year, that is known as receipts and payments account, and the profit and loss part is the income and expenditure account. And with the help of that account, we prepare, we get the either deficiency, that is excess of expenses over income, or surplus, excess of income over expenditure, and finally we prepare the balance sheet. So this is the total part of accounting. Now, and we have also done cash book. The cash book is a book which is regarded as journalized ledger. It is an account, ledger account, it is a journal also. So this has been dealt with very, very vividly, and we have prepared single indices, a single column cash book, double column cash book, a single column only cash column, double column cash and bank column, and triple column cash, bank and discount. Okay, so this is the comprehensive part of accounting has been completed. Now there are huge number of topics. All topics are very specialized topic. For specialized like partnership accounting, like consignment accounting, like joint venture accounting, company accounting, and many more accounting are there. So this is outside your your syllabus is there now. It will be dealt with later on as per the requirement for the classes, for the students of class 11 and 12, ICSE, and for West Bengal board or for any graduate students. Okay, for undergraduate classes, for ICSE, for ISC, and for 11-12 classes of other boards, that is CBSE board, West Bengal board, I will take up that topic separately. Okay, so for the students of ICSE, these are beyond your syllabus. Okay, so thank you very much, friend. Tomorrow we have to celebrate the Netaji Janma Jayanti. Okay, Netaji birth anniversary. It is 125th birth anniversary, and so tomorrow there will be no class. On Sunday no class. Monday I will come again with English. I will be having 2 classes on English and economics, and probably both the classes will be offline. Both the classes will be offline. I would like to direct the students of class 9 and 10 to, and the 8 to come, 9 and 10, be very, very regular in the class. Okay, thank you very much. Have a nice day.